Have you ever invested in a partnership or a syndication and received a K-1 tax form? Were you like me, confused the first time you got it? If so, then you're not alone. And in this video, I'm going to explain what's involved with a K-1 form and how the passive activities rule apply. And if you're new here, I'm Dr. Jeff Anzalone, a periodontist on a mission to get you out of the rat race. Please do not take this as financial or tax advice. Speak with your CPA if you have any further questions with a K-1 tax form. All right, now let's start off with the passive activity rules. Okay, we're going to talk about how they apply to the Form K-1. Now, if you invest in a partnership, whether it's a real estate syndication, real estate fund, or any other type of partnership, the partnership will report its activities on Form 1065, Form 1065. From there, it issues K-1s to each partner involved. A Form K-1 details each partner's share of the partnership's activity, splitting up all the income and deductions, okay? Splitting up the income coming in and the deductions. It gives individual partners the information they need to include on their own tax returns, which is typically the Form 1040, all right? If you invest in a syndication or a partnership, expect that the general partner or the syndicator to issue the passive investor, which would be you. These K-1s typically go out in March, which is usually before the April 15th tax deadline. This document is going to outline what to input on your tax return. So you'll simply take it. So for instance, if I'm investing in a syndication, I have a folder on my desktop and I'll take all of those K-1s and put it in, different folders for depending on how many different deals that you're in. If you're just in one, you'll just have one. If you're in multiple, well, at least identify them and then label them if it's 2024, 2025, whatever tax year. The reason that you do this is whenever you send all of your information to your accountant, you can just simply take that and move it over, upload all of those K-1s in one folder to your CPA, making it much easier to file your taxes. Now, one of the most common issues we see around, and whenever I'm dealing with dentists and doctors and helping them with syndications, is that tax preparers might mistakenly tag items on the K-1 as passive or non-passive incorrectly. So for instance, if you're investing in a business generating income or losses, but you're not the one actively participating, it should be classified as passive. Okay, because you're not doing any type of active, you're not materially participating, you're not helping run that real estate or that business. Now, this differs from rental real estate, which I'm going to discuss shortly. All right, so let's say that I invest $100,000 in a car wash, and this car wash is structured as a partnership. Now, if it shows a $7,000 loss in box 1, now this is where the business income or the loss is reported, the loss should be considered passive because I'm not actively involved in running the business, right? I'm passive. I'm not there walking around picking up the cigarette butts or the trash or the washing or drying cars. I'm not managing employees or anything like that. I'm a passive investor or I'm a silent partner. Now, my $7,000 loss will be reflected on Schedule E, part of your 1040, as a passive loss, reported on Form 8582, the passive activity loss limitations, which list out all the passive activities, income, and losses. Let me repeat that. My $7,000 loss is going to be reflected on Schedule E, part of your 1040, as a passive loss, reported on Form 8582, which is the passive activity loss limitations, which is going to list out all the passive activity income and the losses that you have. Now, let's consider a real estate partnership. Now, let's suppose that you and I create a partnership with a 50-50 split to buy real estate. Let's say it's a local RV park. We're invested in several of those. Now, you're going to be the one, you're the operations partner, while I run a business on the side. So you're going to be the one that handles all the day-to-day management while I focus on strategic growth. Now, we report rental real estate activities on Form 8825, which is attached to Form 1065. Form 8825 is the partnership's equivalent of Schedule E. Now, if we only own rental properties and we don't flip or wholesale, Form 1065 should show $0 as the rental activity details will appear exclusively on Form, remember, 8825. Now, in this case, let's say our partnership ends up with a $200,000 tax loss due to good old bonus depreciation. You and I would split that 50-50, which each of our K1s are going to show a $100,000 loss in box 2, which indicates rental real estate income or loss. However, if you're the one that's the operations partner and a real estate professional, that $100,000 loss should be considered non-passive, thus will offset your W-2 and business income. How about that? But for me, as a passive partner, my $100,000 loss will be categorized as passive, affecting my tax return differently. It would have nothing to do with the income, W-2 income, anything like that. It would only help to offset the rental income that is coming from the car wash. So in summary, Form K-1s, they don't specify whether a loss is passive or non-passive. You, as the individual investor, must determine this based on your own level of material participation following Section 469 of the tax code. If you're handling your own taxes, which hopefully you're not, but if you are, or even if a CPA hopefully is doing them for you, remember to apply the passive activity rules very carefully. The partnership, remember, the partnership is not going to determine this for you. You either have to do it if you're filing your taxes, or let your CPA know, are you the one that is materially participating in the business, in the syndication, in the partnership, or are you just a limited partner? You're a passive investor. Now, I know I've thrown a lot of stuff about this at you. I know it can be confusing. If you need more help, whenever, let's say you invest in a syndication, you get your K-1, then you can reach out to either your accountant or you can reach out to the syndicator to walk you through what those numbers mean on that K-1, especially if you're a new passive investor. Now, if you want to learn more about how you can actually use your real estate to offset your W-2 taxes, do me a favor, check out this video.